Preparing for a risk and compliance consulting at Accenture interview. You've reached Candy Mentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What does a risk and compliance consultant do? A risk and compliance consultant helps clients identify obligations, assess risks, design controls, and prove compliance to regulators or internal stakeholders. At Accenture, I would connect regulatory knowledge with process design, data, and technology. For example, if a bank faces stronger AML expectations, I would map the requirement to impacted processes, test control gaps, recommend remediation, and help implement sustainable monitoring through a GRC or workflow platform. While answering, focus on identifying regulatory obligations, assessing business risks, designing controls, supporting remediation, and using technology to help clients build sustainable compliance programs. Question 2. How would you assess the maturity of a client's compliance program? I would start with a structured maturity assessment across governance, policies, risk assessment, controls, monitoring, training, reporting, and technology. I would review documentation, interview control owners, test sample evidence, and compare practices against regulatory expectations and industry benchmarks. Then I would rate each area from ad hoc to optimized, highlight root causes, and create a prioritized roadmap. The key is making the assessment actionable, not just producing a scorecard. Make sure to cover maturity dimensions such as governance, policies, controls, monitoring, issue management, technology enablement, reporting, culture, and comparison against leading practices or regulatory expectations. Question 3. Explain the 3 lines model and why it matters in risk management. The 3 lines model clarifies who owns, oversees, and independently assures risk management. The first line is the business, which owns risks and executes controls. The second line includes risk, compliance, and legal teams that set frameworks and challenge the business. The third line is internal audit, which gives independent assurance. It matters because unclear roles create duplicated work, missed risks, and weak accountability, especially in complex regulated organizations. In your answer, talk about first-line ownership, second-line oversight, third-line assurance, clear accountability, independence, escalation, and how the model prevents risk management gaps. Question 4. How do you build a risk and control matrix for a business process? I build an RCM by first mapping the end-to-end process and identifying where material risks can occur. For each risk, I define the control objective, control activity, owner, frequency, type, and evidence. I also assess whether the control is preventive or detective, manual or automated, and whether it is designed effectively. Finally, I link testing results to residual risk and remediation actions so the matrix becomes a working management tool. Be sure to mention process mapping, risk identification, control objectives, control frequency, ownership, preventive versus detective controls, evidence requirements, testing approach, and linkage to residual risk. Question 5. How would you approach regulatory change management for a client? Regulatory change management starts with identifying new rules early, then translating them into business obligations. I would run an impact assessment to determine affected products, processes, systems, policies, and controls. Then, I would assign accountable owners, build an implementation plan, update procedures, train impacted teams, and create evidence for auditability. Strong tracking is essential because regulators do not just ask whether a rule was read, they ask how it was operationalized. While answering, focus on horizon scanning, impact assessment, obligation mapping, accountable owners, implementation planning, policy updates, control changes, training, testing, and management reporting. Question 6. A client has repeated audit findings in the same compliance area. What would you do? Repeated findings usually mean the organization fixed symptoms, not root causes. I would review prior issues, remediation evidence, process design, control ownership, and management oversight. Then I would perform root cause analysis, such as unclear procedures, insufficient training, weak system controls, or poor accountability. The solution should include redesigned controls, named owners, milestone tracking, and validation testing. I would also improve reporting so management can see whether remediation is truly embedded. Make sure to cover root cause analysis, control design review, accountability, remediation ownership, sustainable fixes, evidence standards, management reporting, and prevention of recurring issues. Question 7. What is SOX control testing, and how would you perform it? SOX testing evaluates whether controls over financial reporting are properly designed and operating effectively. I would first understand the process, confirm the key risk and control objective, and evaluate design effectiveness. Then I would select a sample based on frequency and risk, inspect evidence, reperform steps where needed, and document results. If exceptions appear, I would assess severity, root cause, compensating controls, and whether the issue could create a material misstatement risk. In your answer, talk about financial reporting risks, key controls, design effectiveness, operating effectiveness, sampling, evidence review, exceptions, deficiency evaluation, and coordination with audit teams. Question 8. How would you support a GRC technology implementation, such as ServiceNow GRC or Archer? A GRC implementation is not just a technology project. It is a process and governance project. I would start by understanding current risk, control, issue, and audit workflows, then standardize requirements before configuring the tool. Key activities include defining taxonomies, mapping control libraries, designing approvals, migrating data, building dashboards, and supporting UAT. I would also focus heavily on training and adoption, because a well-configured platform fails if users keep working offline. Be sure to mention requirements gathering, process standardization, control libraries, workflows, data migration, user acceptance testing, reporting dashboards, change management, and post-go-live support. Question 9. How would you improve an AML or KYC compliance process for a financial services client? I would first map the onboarding, screening, due diligence, and periodic review process to see where delays or risks arise. Then I would review customer risk scoring, beneficial ownership capture, sanctions and PEP screening, alert disposition, and escalation standards. Common improvements include better data quality controls, risk-based review cycles, workflow automation, and clearer exception handling. The goal is not only faster onboarding, it is defensible compliance with consistent evidence. While answering, focus on customer risk scoring, onboarding controls, beneficial ownership, sanction screening, alert quality, periodic reviews, data quality, escalation, and operational efficiency. Question 10. What are the key components of a third-party risk management program? Third-party risk management starts with knowing which vendors are critical and what risks they introduce. I would segment vendors by service criticality, data access, geography, regulatory exposure, and operational dependency. The program should include due diligence, risk scoring, contract requirements, ongoing monitoring, issue management, and exit planning. For high-risk vendors, I would expect stronger cybersecurity reviews, business continuity evidence, compliance attestations, and periodic performance reviews tied to governance reporting. Make sure to cover vendor segmentation, due diligence, risk ratings, contract clauses, ongoing monitoring, cyber and operational risk, performance tracking, exit planning, and regulatory expectations. Question 11. How would you help a client comply with data privacy requirements like GDPR or similar regulations? Privacy compliance begins with understanding what personal data the organization collects, why it collects it, where it stores it, and who receives it. I would support data mapping, identify lawful bases for processing, review consent and notices, and assess controls over retention, access, breach response, and data subject rights. I would also check vendor data processing agreements. Strong privacy programs combine legal interpretation, operating procedures, system controls, and clear accountability. In your answer, talk about data mapping, lawful basis, consent, data subject rights, retention, privacy by design, vendor controls, breach response, and documentation obligations. Question 12. How do you design a compliance monitoring plan? A compliance monitoring plan should be risk-based, not a checklist of everything equally. I would identify key regulations, high-risk processes, prior issues, regulatory focus areas, and business changes. Then I would define monitoring activities, frequency, sample sizes, evidence standards, owners, and escalation paths. Results should be reported with themes, root causes, and remediation timelines. Over time, trend analysis helps management see whether controls are improving or the same issues keep returning. Be sure to mention risk-based coverage, regulatory obligations, control testing, monitoring frequency, sample selection, issue escalation, management reporting, trend analysis, and continuous improvement. Question 13. Explain inherent risk, residual risk, and key risk indicators. Inherent risk is the level of risk before considering controls, while residual risk is what remains after controls are applied. For example, a payments process may have high inherent fraud risk, but strong approvals, segregation of duties, and monitoring reduce the residual exposure. Key risk indicators are metrics that signal changing risk levels, such as exception rates or overdue reviews. Good KRIs have thresholds, owners, and escalation rules, not just dashboard visibility. While answering, focus on risk before controls, risk after controls, measurable indicators, thresholds, early warning signals, escalation triggers, and their use in management reporting. Question 14. How would you conduct a process walkthrough to evaluate control design? I would begin by reviewing policies, procedures, process maps, and prior findings, then interview the people who actually perform the process. During the walkthrough, I would trace one or more transactions from initiation to completion, noting systems used, approvals, handoffs, exceptions, and evidence produced. I would compare actual practice against documented controls and risk objectives. The output should clearly show control design gaps, undocumented controls, and areas requiring testing or remediation. Make sure to cover stakeholder interviews, document review, transaction tracing, system touchpoints, control objectives, evidence inspection, gaps between policy and practice, and documentation of findings. Question 15. How would you handle a client stakeholder who resists a compliance remediation plan? I would first understand the reason for resistance, because it may be cost, workload, unclear ownership, or fear of operational disruption. Then I would explain the risk in business terms, regulatory exposure, audit consequences, customer impact, or process inefficiency. I would offer practical options, such as phased remediation or automation, while being clear on non-negotiable requirements. My goal would be to move from confrontation to joint ownership with transparent milestones and leadership support. In your answer, talk about empathy, understanding concerns, regulatory risk, business impact, practical options, prioritization, data-backed recommendations, executive alignment, and collaborative problem-solving. Question 16. If a client has many compliance gaps but limited budget, how would you prioritize remediation? I would prioritize based on risk, not noise. First, I would rank gaps by regulatory severity, likelihood, financial impact, customer harm, and whether compensating controls exist. Items tied to legal deadlines, regulator commitments, or high customer impact would come first. Then I would identify quick wins and dependencies, such as policy changes before system configuration. The final roadmap should show immediate actions, medium-term fixes, owners, cost estimates, and residual risk accepted by management. Be sure to mention risk ranking, regulatory severity, customer impact, likelihood, control weakness, enforcement exposure, quick wins, dependency mapping, and phased implementation roadmap. Question 17. Why do you want to join Accenture as a risk and compliance consultant? I am interested in Accenture because risk and compliance work increasingly requires transformation, not just advisory reports. Accenture combines regulatory knowledge with technology, data, operations, and change management at scale. That fits how I like to work. Understand the risk, redesign the process, and help implement the solution. I am also attracted to the exposure across industries and the learning curve of working with multidisciplinary teams on complex client problems. While answering, connect Accenture's consulting scale, technology-led delivery, industry expertise, transformation work, client impact, learning culture, and your own risk, compliance, analytics, or stakeholder strengths. Question 18. A new regulation becomes effective in 90 days. How would you help the client respond? With a 90-day deadline, I would create a rapid response structure immediately. Week 1 would focus on interpreting the regulation, identifying impacted business areas, and confirming accountable owners. Then I would build work streams for policy updates, process changes, system impacts, control design, training, and evidence collection. I would use weekly governance reporting to track blockers and decisions. The objective is minimum compliant readiness by the deadline, followed by optimization once the urgent risk is controlled. Make sure to cover rapid interpretation, impact assessment, governance setup, workstream planning, policy and control updates, training, technology changes, testing, and executive status reporting. Question 19. How can analytics or AI improve risk and compliance management? Analytics can make compliance more proactive by identifying patterns that manual reviews may miss. For example, transaction monitoring can use anomaly detection to prioritize unusual behavior, while dashboards can show emerging risk trends across regions or products. AI can also support document review, regulatory mapping, and case triage. However, I would emphasize governance. Models need explainability, validation, data quality controls, and human oversight, especially when decisions affect customers or regulatory reporting. In your answer, talk about anomaly detection, automated monitoring, alert prioritization, predictive risk indicators, document review, workflow efficiency, model governance, explainability, and human oversight. Question 20. Tell me about a time you worked through ambiguity on a risk or compliance project. In an ambiguous project, I focus on structure first. I clarify the objective, list knowns and unknowns, identify stakeholders, and break the issue into work streams. For example, if regulatory ownership is unclear, I would map obligations to processes, validate assumptions through interviews, and create a decision log. I would communicate progress frequently rather than waiting for perfect information. That approach helps teams move forward while keeping risks, dependencies, and open questions visible. Be sure to answer using STAR, highlighting unclear requirements, how you structured the problem, engaged stakeholders, validated assumptions, delivered an outcome, and learned from the experience. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.